Okay, this is what we call in our business a hard pivot. We're going to go from talking about investing in America to investing in sports. So I'm really happy to have the three of you with me. We want to get you guys involved in this conversation. So I want to put up a poll about investing in sports. If we could show that, and you guys can weigh in on this, and I'm going to have the panelists weigh in as well. And it's all about where you would invest. If you could invest in any sport right now, what would it be? And just to clarify for the audience, when we say football, we are outside of America, so we're talking about the sort of football that Mark and Amanda are invested in, also known as soccer. So take a look at that. I want to start by asking each of you not just where you would invest, but let's talk about how much it costs to be in sport right now. It's really expensive. All of you have gotten in at lower levels, but Amanda, I want to start with you. Valuations, if you had to distill it down, how do they feel right now across the sport ecosystem?
Well, valuations are toppy at the moment. I mean, especially in football, in my opinion. I mean, we invested very well. We first went into Newcastle United. We were investing at under 2 times revenues. There is a big still dislocation between the European markets and the US market. So I think football has continued to be, you know, it's a prized asset. So there are fewer teams. So valuations have risen and continue to do so. So,
but feeling a little toppy, and if I'm translating that for the American audience, that means expensive.
Expensive, I would say. Yeah.
Mark, do you agree with that?
Well, sure, especially because no one in sports really looks at cash flow or losses. They look at multiples of revenues.
Right.
So almost all of these teams actually lose money, even at the enormous valuations you see in the NBA. Cricket, you know, is on something we're looking at now, already being in baseball, football, and golf. Cricket clubs in the IPL in India are trading at 10 times, 12 times revenues.
Yeah.
In something that's emerging.
And so, Ted, what effect does that have on people coming in? You got in a long time ago. You know, you own a hockey team, a couple basketball teams, an esports team there in Washington, D.C. Are the prices high enough that people are sort of holding off, or are there always going to be buyers who are willing to pay up and up and up?
I don't think you can have a blanket statement, but I think we're terribly undervalued right now. It's the only category in media and technology that has kind of built-in annual growth. And if you're in a good market, I mean, we're in top 5 market, most important city in the world in Washington, D.C., but our media market goes Virginia, Maryland, 10 million households, very educated. It's an important business in that community. We're not just in the team business. We own real estate. I now have 1.6 million square feet. I can walk to the White House. I can walk to the Capitol. President of the United States decided to have the inaugural in our building. We were called the most important arena on the planet. And so I think the multiples by leagues are maybe a little frothy, but not on control changes.
Okay.
If you want to buy one of these teams, they are the jewel. No competition. Government allows you to be the only team in that region. And I think that the tree can still grow to heaven.
And so, Amanda, how does all of this inform what you look at next when you're thinking about sports investment? I mean, it's been public that you were part of the Newcastle ownership. You're potentially looking at another football club. How do you go about assessing it, and what are some of the metrics you look at to determine what is a good deal here?
Well, as Ted said, great clubs, story clubs will always attract a lot of, interest in investors. So there's a scarcity value. But what we look at is opportunity to grow that market. Most especially with the clubs that we're looking at, one of the difficulties is the new regulatory environment, and the cash flow is key. So In the UK, you have much more stringent financial controls, profit sustainability. So we're looking for an opportunity to invest where there's that arbitrage to get things, right. So I can appreciate that, there are some assets that are,
Right.
a lot of the clubs in the top of the Premier League, they change hands very rarely, and that's not always the same in the US. So I think we're looking for great opportunities in football at the moment.
Yeah. I want to hear what the audience had to say about this, but before we get to that, Mark, I mean, on that point that Amanda just made, part of your thesis in going into Norwich City in English football was that sort of, here we have it.
And the answer is?
And the answer is, okay. Oh, so this is soccer dominates global revenue from, okay, we're going to talk about women's sports in a second. And here we go. All right, which sport are you investing? Okay, so they're with you, Amanda. Football. I mean, not shocking, but you did it. So tell us
Sure.
why.
Well, it started because we felt with 20 years of experience in Milwaukee, along with operating management and 40 plus data scientists and analytics people, we could maybe bring some of that expertise to a sport where it's really been more about star power with players and coaches. Mm-hmm. We looked a lot at the impact you have in the community, which Ted and Amanda were talking about. Norwich City is at the east of England. It's a few 100,000 people, more churches than weekends, and yet when they put out a mental health video which is, I encourage everyone to watch, 2 minutes, globally within 2-3 weeks, 60 million views, 60 million. So the impact you can have globally in football exceeds the other sports, and that's really what attracted us.
So I want to talk about, some of the folks who are investing here, and all of you have had some experience with this, either in your non-sporting life or in your sporting life, which is institutional capital coming into sports. Ted, we're notably here in Qatar, which is a partner of yours, and that was a historic deal when the QIA, I believe, came in to Monumental as a minority investor. I want to start with you. What has been the effect, in your opinion, of having institutional capital come more aggressively into team ownership?
Well, when private equity started to come into the market, it frightened me because I have a private equity fund, and while I'm a large limited partner myself in the fund, you're investing other people's money, and you want some kind of exit.
Right.
And these are not the kinds of assets that are transactional. These are, the Capitals, this is our 50th anniversary. The NHL is over 100 years old. Our building, we're transforming it right now, it's 30 years old. They have longevity. Their connectivity in the market and in the community really is important. And so when I set out to find a partner, I fell in love with the people here, mostly because their view of the world was very synergistic with me and my family and my partners, which is Washington, D.C. is a very, very safe harbor to make investments in. Mm-hmm. The real estate market is going to be very, very strong, and we should continue to look at this as a long-term play. You can't look at it in 5-year horizons. I've owned the teams now for 25 years, and I paid $85 million for the Washington Capitals. Maybe they're worth $2.5 billion now. I paid $350 million for the Wizards, maybe $4.5 billion now. But that doesn't matter because they're not for sale.
Right.
What we want to do is to build long-term, and our business model looks like a SaaS business. I grew up in the tech industry. We were the first internet company to go public in America Online, and subscriptions and revenues that can be rejuvenated year over year. About 80% of our revenue is contracted. Our variable ticket sales, season tickets, they renew in a bad year at 80%. In a great year, 95, wow. 96%. And so it's the safest kind of investment. We grow 5, 6, 7% per year. It's like a coupon. And as long as you don't do anything crazy and stupid, break the CBA, go into the tax. So if you're good partners, I thought sovereign wealth funds would be the right next generation partner for sports teams. We had to help to rewrite the charters of the leagues to allow pension funds and sovereign wealth funds to come in. And they've been our best partner. They're helpful when needed. They're very passive when you don't ask for help. And this would be a great investment for them. I take that responsibility very, very seriously. And sports, entertainment, technology, you know, what I saw last night about the museum, was dramatic. I mean, that's what we're building in Washington, D.C. I just built an art gallery right next to the arena. We're going to have a museum within the arena. These people get it. Education, universities, Georgetown plays in our building, NCAA plays in our building. As I said, the president held the inaugural in our building. These are the modern day conveners. And so we've built a platform where we control the IP, the teams, the platform of distribution, both through linear and digital. We own our network without any debt. We're the only regional sports network that has no debt. I heard a lot the last 2 days about debt. I'm a poor kid. I hate debt. And so these are good businesses still in the distribution side. And to be able to build a platform, multiple teams, all on one platform, I think is the right strategy.
Yeah. And so, Amanda, what is the effect in the near and midterm of this institutional capital coming in? You have direct experience with this. Does it impact valuations? Does it impact who grows faster? Like, play this out for us as you think about this new source of capital.
Well, I mean, I agree with what Ted said. I think sovereign wealth funds make great partners, and because they're much more used to long-dated assets and sport is, you know, comfortable with partnerships that go on for 10, 15 years. I also think that institutional sovereign wealth fund capital has made the way we invest much more efficient in terms of we've been able to introduce regulatory rules which have attracted more private equity style capital because, you know, you have to be efficient. So I think that the more and more we get, the more traction you get sovereign wealth funds into this environment, you're going to grow the valuation pool, and good assets will always grow. I think what, you know, Ted has done and what Mark's also doing is important. We need to not be complacent. We need to make sure that we create the best type of, whether that's football or golf or whatever our speciality is. We need to make sure that when we look at what we're producing to the fans, we provide, you know, you've got the right infrastructure around sports venues is key. And you know, Ted talks about having no debt in his content business. You know, again, debt is expensive. You know, cost of capital is going to, especially at this time, the cost of building a new stadium, a new arena is it's a lot of money. So if we
Ted knows all about that.
We just did a partnership with our city where we're redoing our arena and the real estate around it, and the city's putting in $515 million.
Yeah,
and it's been a great partner for us, and we've put in 200 already. We'll put in another 300. It's $1 billion new front door for downtown DC, and we'll be responsible for basically rejuvenating downtown.
And so Mark, Amanda mentioned golf, and golf was among the things people are investing in. You're part of Strategic Sports Group, a number of very successful team owners who have come in to sort of accelerate some of the things that are happening in golf. What happens next with golf? This is a sport that is very closely watched and invested in this region. What can we expect to see, and what's happening in the world of golf?
Well, interestingly, we talk about this story to these sports. Golf was probably founded in the 15th century, and King James in 1457 stopped the men from playing golf because they were playing golf and not doing archery, which was a military situation for the country. And so you've got something that's 600 plus years old, and that everybody plays everywhere in the world, whether you're 5 or frankly 85. We saw an opportunity, really John Henry at Fenway Sports Group, and the leads in that are he and Steve Cohn of the Mets and Arthur Blank of the Falcons, to the PGA. Actually, I think in a way people talk a lot about LIV. LIV was a really good catalyst for bringing golf into this proper today's generation and today's sensibility. So the PGA realized that it was somewhat sleepy and looked to bring in us as partners to really align interests with the players. Everything starts with the players in these sports, and then second with the communities. So our group of owners have helped manage the PGA. And whether that's, everything is up, by the way, starting with social media.
Right.
So both social media in baseball and golf probably was behind, those sports were somewhat sleepy. In golf this year, we're up 60% in terms of social media metrics. We're up 10% in attendance in tournaments, and we've sold $450 million of new sponsorships in the last 6 months. So, we're helping the professionalization of the sport, and I think that LIV occasioned that because everything was sort of just, complacency
right.
and was the order of the day. The future, I think we're hoping to align interests. You're dealing with 2 governments now. You're dealing with 2 groups of players, and you're dealing with fans and, by the way, players who want to see the best compete against the best. So we're hoping to be a catalyst to facilitate that.
And Amanda, we're getting a little short on time, so I want to make sure we touch on one thing that we saw a chart about earlier, which is women's sports. The whole ecosystem is growing. We see a lot about that in the United States. More recently, back in England, we saw the deal with Alexis Ohanian coming in
Yes.
to the women's side at Chelsea. Where are we in that evolution, and what is the opportunity? How do you sort of suss out the growth opportunity? How would you characterize it in women's sports at this moment?
I think the Chelsea deal was extraordinary. I mean, incredible valuation and great on Chelsea because, the first deal that happened, I think they did an internal deal, and now it really does underpin a valuation that will support a lot of clubs in the Premier League, especially in women's sport and women's football. Women's football, I always say, let's not be complacent. We have to attract more audiences, and we have to ensure that we get our fans to go to women's games, that it's supported not at the executive level, that it's not just done through corporate deals, that we actually get the broadcasters and we make sure that we drive everything towards the women's football game.
Right.
And
I'd say women's sports is the growth stock right now. We own a WNBA team with a second most tenured ownership group in the WNBA. And what's happening there is indescribable. Sellouts, media deals, long-term commitments from sponsors, being able to sell suites, and opening up a whole new category of advertisers endemic to fashion and for women. And so I think that, I'd like to make Washington, D.C. the women's sports capital of the world. Essentially, Title IX is what changed everything for the United States. And, we have a great women's soccer team in D.C.
I was going to say, Michelle Kang very much agrees with you with that sentiment, I would imagine.
Yes, but She's a little bit off strategy because my belief is that a platform has to be regional and geographic.
She's going global.
Yeah, and
He's global.
so I don't want to acquire a soccer team in London, which always, it's like 20 teams within 50 miles. It's like,
Yes, there are a lot.
that wouldn't happen in the NBA and the NHL and the WNBA. But I do think that women's sports is just getting started, and there being the multiple right now is the same as the NBA, 10 to 12 times. But the revenue growth is
Right.
But you have,
dramatic.
in basketball, you have the support, you have the media rights to support that. And I think there's a slight dislocation with the UK in that we don't have that yet. And I think there needs to be, you know, you guys have got it right.
I also think the way the leagues are structured,
Yeah.
right? So the NBA, the NHL, we look at ourselves like we do in DC as a platform.
Yeah.
And so we've got NBA Africa, we've got NBA China, we obviously have been announcing work that we're going to do in NBA in Europe.
Right.
We'll have some expansion in North America. All of a sudden, we will look like a Google. We'll look like an Amazon, right? Where all of their growth started the first 10, 15 years in North America. But of the 9 billion people on the planet, there's 350 million in North America. You've got to go. So the pivot from analog to digital, North America to global, bringing in very savvy investors with a global mindset, I think augurs really, really well for these leagues.
So many more questions for you guys, and encourage you and the audience to find these guys outside if you can. So much going on in sports. Mark, Ted, Amanda, thank you so much for your
Thank you,
time. Really
Jason.
appreciate
Thank you.
it. Thank you all.